All right, so in this episode, we're going to take a look at the wheel strategy when you have a small account. This can be a little bit more difficult if you have a small account to do the wheel strategy, so things may be slightly different. Now, if you're brand new to the channel, I highly encourage you to learn more about the wheel strategy. Just go to our website, tradersfly.com. And then you can take a look and even book a free 20-minute coaching call. But here you can learn more about the wheel strategy profits course. It's got 22 hours of material. And one of the big things that's different about this course is we actually have examples and trades on the paper platform to show you how those trades go from 20 days out, 19, 18, 17. So there's a lot of trade examples in there, not just theory and concepts, but also some trade examples. So it's not just PowerPoint, where you can actually see the trades. How do they work? How do they operate? And that way you can learn through simulation and scenarios and situations in the same way that police officers do. All right, let's get started. Let's take a look at the wheel strategy here. Market is pulling back a little bit today, but what I want to show you in the wheel strategy, one of the problems with doing the wheel strategy is if we go in and we look at certain stocks, like let's say you want to do the wheel on Tesla. Now, the problem with doing the wheel strategy on something like Tesla when you have a small account is that really what you've got is, let's say we go to sell a put or buy 100 shares, just to buy 100 shares of stock right here. If we go in and send this in, that's going to cost quite a bit, right? The stock's at 246. So you're going to pay $24,000. So if you have a small account, you may not be able to do that because, hey, it's pretty pricey or expensive. And if you look at even stocks like Microsoft, here is a stock that's $331. So again, if we buy 100 shares of stock and we send that in, that's $33,000. So to do the wheel strategy now on two different areas or two different stocks, you might have to put up already $50,000, $60,000 just to get that going. So that's a bit of the problem with doing that. So you can't spread your money. Now you might say, yeah, they're big stocks and now you can make quite a bit of rental income or sell premium. So here on Microsoft, you can get $2.38 or $1.62, somewhere around here. About $2 depending on the duration. But the problem with this is you can't spread your capital as well. When you go to a cheaper stock, and what you might need to do is go into cheaper stocks. Let's say they're trading between $11 and maybe $25, and we'll scan in the weeklies. You might need to go into a stock that's a bit cheaper. So something that trades weeklies, but also a little bit more, doable. So what you'll choose here eventually is maybe something like here, Fastly or Chewy's or something along those lines. And you could do something even cheaper. So if we go in and do, let's say, more stocks, okay, last price. So here is Norwegian Cruise Lines, NCLH. Okay, NCLH. So we'll type it in, NCLH. So it is $16, but here's the thing. This one, to buy 100 shares of stock, okay, you can see you're only putting up $1,600. So that's quite a bit better price-wise, because what this allows you to do is that you could position yourself now to do, let's just go with 500 shares. And we might be able to do 500 shares and we get this company. But then what it allows you to go through on the option side is you can sell the option premium now, not just one here, but it allows you to, hey, I'll sell one at the 17.5. Okay, great. 16 days out. I'll do another one 30 days out over here at 18, and I'll send that one in. There we go. We've got some more. I'll do a 37. I'll do one here and I'll send that, and I'll do one here and I'll send that. So now look what I'm doing. I'm built a 500 share lot and I've got 1, 2, 3, and I might go in to another one. Let's go with 4. Here's the 4th, and maybe do a 23-day. Here's another 17.5. So the point being, okay, so there, I might have hit my 5 now. Okay, so what I've got now is 1, 2, 3, 4, 5. So I've got my positions, and now I was able to spread my capital, right? So that's pretty good. And if you can spread your capital, that's nice. And you're also, I might be able to sell a put. Let's acquire some at a 16 level. Okay, and let's do another one maybe over here at 15. And I've got this. So I know this chewed up quite a bit of capital when you really think about it, 500 shares. But rather than doing 100 shares of maybe a Tesla, you could do 300 or 400 shares of stocks like this, or 200 shares of this, which it allows you to then spread that money and spread that capital. And this is kind of what we go over in that course, much more so to spreading out that risk in different zones and areas. So you can see I've got all my positions spread out, different spots, 500 shares, one here, one. So I got, and I've got a put over here at the 15. So really what I'm creating is a ton of different positions, which is not something you can do when you're only doing with 100 shares of a bigger company. And sometimes this is what you have to do with a smaller account, unfortunately, because you just can't deal with that in a larger account, because doing 500 shares of this, let's say we go with 500 shares, it's only $8,000 compared to maybe a $30,000 for just 100 shares of, you know, Microsoft or something like that at this point in time. So anyways, I hope that helps, gives you a little insight. Truly appreciate you sticking with me. Highly encourage you to check out the wheel strategy on our website, tradersfly.com. Take a look at it. There's a lot of knowledge and information there, as well as freebies and tons of other material and courses, along with iron condors, vertical spreads, weeklies, and much more. So thanks again for joining me. Truly appreciate it, and I will see you in the next video. Take care.